Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update, and this is for Wednesday, the 29th of March, 2017, about 4:15 p.m. Central Daylight Time. All right, in the stock market, all day long, we've seen a weak Dow, a so-so S&P, and a stellar performing NASDAQ. It stayed that way the whole session. We also saw big action to the upside in the gasoline, as the API stock showed an even bigger draw in distillates and gas. And even crude went up because while the API showed a draw, I think it was 800,000 barrels, it's nothing like we saw in the API report yesterday that was almost triple that. So when you look at all this, the market got a bid in through here, and I'm still feeling that the natural gas is looking at seasonal lows, and we'll see what that all means. But in going to the Dow, for the week, we're up 26 points. The market's had a break from 21,162 to this week's low so far of 20,356. And off that low, we're up 250 points. Nothing wrong with that. That's pretty good. When we take a look at the area chart of closes, the market has gone from 21,037 all the way down to 20,497. So let's call it a 500 and, what is that, point break there, about that, and all the way back up now to the market at 20,601. So we're off the lows, in plain English, about 105, 104 points or so. When we look at the action here, though, it's not very impressive just yet. It could get more interesting because this type of price action could lead to the market, if it gets over 20,678, then setting up a swing line instead of having lower highs and a lower low, of higher lows and higher highs if it were to take out 20,678. So we're at an important crux in it. What bothers me on it is even if that occurs, you're still under the 18-day average at 20,752. That's not so exciting in the market. You'd have to close over that number to be friendly, and then if you ended up buying long over 20,752, your risk back down to where you're at now is $1,000. So I don't see anything there of interest, if you will. The market did break away and hold down, as it attacked the lower Bollinger Band, and it's bounced back. That's what I was trying to say there. But I'm still concerned with that resistance above the market, and momentum is still oversold. Do you see that 28.77? I view any reading under 30 is oversold. Now, the momentum is trying to come up. As you can see, both numbers are moving to the upside, not in a vertical fashion, not like the market did here when a big correction, but rather just slightly. And when you look at that, it's more of a bounce than it is anything else. On the S&Ps, this is what scares me in the Dow. The market had the lower lows and all of a sudden comes up to the 18-day average, and it's run into that brick wall. Now, you might say, what's the trade? Well, if you were to buy over 2360, yesterday's high, depends where today's 18-day average comes in when we reopen, but I think it could get to the point where traders will buy over that high, put a stop under today's lows, and see if the market can lift back towards the upper Bollinger Band. Momentum is pointing up. It would not surprise me if traders try to make that particular type of trade. It's not super high risk. It's about $600. Doesn't look like that, but if you look at today's low of 2348.75, and you buy over 2360, you've got approximately 12 points at $50 a point, $600. If we look at the NASDAQ, this is the strongest. It's now overbought, which is a problem. It went back to that upper Bollinger Band and has been unable to push it out into the upside. Should it do that, well, then you would carry the other indices probably. But you're at a resistance point. You have to respect that getting through and staying over an upper Bollinger Band, very difficult when you're overbought already. In the Russell, Again, we went back to the 18-day average, fighting a battle there. Momentum pointing up. The trend in this market is now up. You're going to say, how could that be? Well, you got higher lows, higher highs. You closed, settled, if you will, over the 18-day average of closes. So if one were to buy the market here against the 1366 level, they have to risk down to 1331 and a fraction. Unfortunately, that's 30 points. Let's assume it's $50 a point. You got a heck of a lot of risk, $1,500. So I don't know how many people want to take that. Look at the low in the VIX. The last break low came in at 1092. You have to take that out to say that the market isn't in an uptrend in the swing line. You lost the uptrend in terms of momentum when you closed yesterday under the 18-day average and did that again today. But should the market lift back up, what could happen, and not taking out today's lows, I'd move this arrow over here. You'd have higher lows, and if you were to close back over the 18-day average, you'd have the swing line up, prices up over the 18-day average. There's one factor that's still bothersome. Momentum is still pointing down. Admittedly, it's an oversold territory, but it hasn't even flattened out yet. So little caution there. This is part of that schizophrenia that we're seeing in stock index trading. You know, today they were talking also that President Trump's talking maybe a vote on the health bill next week. Who's going to pass it? I mean, we haven't heard anything on the news. There must be things we just don't know going on. Maybe that's part of all these problems. The market's not quite got a feel for where we're at. In the 30-year note, very interesting, you have an embedded reading. So you now have the point where until the red line closes under 80, the market's being bought. The support, it's right in front of you. It's the 100-day average of closes. If the market can bounce up from here, look for the resistance at the upper Bollinger Band. But how fascinating that is. Here's a market that is debating, do we get 2 or 3 more interest rate hikes this year? And yet, the longer-term rates are actually falling. Remember, it's an inversion. The higher the futures go, the lower real rates are. Same thing has happened in the 10-year notes. Let's do this today, and you can see it. You can see how the market's going sideways right here. Both numbers are over 80. Day before, they're both over 80, and the day before. So my scenario is it takes 3 days to do that. If you lose the embedded readings by the red line getting back under 80, especially on a close, odds are strong that price and the 18-day average, that line in the sand as I so often refer to it as, will come together. June dollar index, you lost the embedded reading. You didn't lose it yesterday, you lost it today. The only time it can get it back is the day after it loses it. After that, the market just is in an oversold territory, can't re-embed right away, and that becomes a problem for the bears. So this market's on a big defensive point. If this was just a bounce in the market and it's going to re-embed, we'll know so tonight and tomorrow. In the euro currency, the market lost its bearish embedded reading. It's turning down. Remember I said there's an inversion between these two. Now the support in this market gets all the way back at 107.59 down to the 100-day average, 107.32. So we have the back and forth action. Was this market down because today Brexit was actually formally begun? I don't know. It's just acting like a poor market now, and it's out of that uptrend, as is the British pound. The pound was down only 15 points. You know, Brexit's been coming for months on end, so I don't think it's the event that's doing it, but psychologically, maybe. But you've ended this thrust to the upside here. You've ended it in the euro currency, and you've ended it temporarily in the dollar index to the downside. So that is all important. In the Japanese yen, you have the embedded reading. We've had a lot of embedded readings recently that have lasted a couple of days and then they seem to go away. So be a bit cautious about them, but that doesn't mean you don't trade them. Something else is happening. The 18-day average is about to cross over the 100-day. That is considered bullish, and we haven't seen that type of action, folks, in many, many months. I take that to be a big event at this point until it's proven wrong. When we look at the crude oil market, let me take you back right here. Here you lose the embedded reading. The day before, everything's in bed. You lose it right there. This is part of what I teach in my charting course. And I know a lot of you think, oh, I can watch it here and I'll get what I was saying. Believe me, I'm very careful what I say here because my course teaches so much more. But the concept is here. You lose that momentum. If it's going to stay lost, the odds are strong that price and the 18-day average will come together. Bingo, you're there right now. If we go to Rebob gasoline, you lost the reading back here. Watch this day. Then the market's slipping away. It's still lost. Doesn't matter to me what goes on. Price and that 18-day average should come together. Price and the 18-day average should come together, should come together, should come together. They came together, and now the market's still moving up. So it's a very important tool, and the way I teach it, you'll really start grasping it. Nat gas, I think your bottom was made here when all this occurred in the stochastics. And now I'd be a bit cautious. You first move over the 100-day average into the upper Bollinger Band. But if we take a look, are we embedding? Watch this. Come back one more. Day 1, day 2, day 3, day 4. We're embedded, folks. So pullbacks in the market, still buying opportunities. I want to talk to you about technical trading tips from the top pros. And I mean, it's pretty interesting. Lots of articles in here. The benefits of relative strength. I'm going to be doing a video on that shortly. Optimizing stops, ways that you can figure out what kind of stop orders do you want? How would you work with them? This is a PDF that we'll send right out to you by email. Call us. Go to our website. You can also, if you're watching right up here on the video and you see an icon, it means you're catching something from YouTube that somebody's put on their site. Click on that icon. It'll play 1, 2, 3. These are the contents of what it's got. Very interesting, something for your library, and I'm trying to get more of these together for you as well. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.